All right, with that, for those of you who may not be familiar, the NPDA supports franchise and independent power sports dealers through education, advocacy, programs, and practical resources, all focused on helping dealers build a stronger, more professional, and more profitable industry. This partner webinar series gives dealers direct access to the companies, tools, and people helping shape the power sports retail landscape with one goal in mind, keeping dealers informed, connected, and exposed to ideas they can actually put to work. Today's webinar focuses on one of the most important and often misunderstood parts of dealership operations, insurance. The insurance market for powersports dealers continues to evolve. Some areas remain challenging, carrier expectations are changing, and new markets are beginning to emerge. For dealers, that means the way you position your business matters more than ever. The stores that understand their exposures, coverage gaps, risk profile, and renewal strategy are going to be in a much better position than those who simply wait until renewal and hope for the best. Every dealer knows the pressure points. You're managing inventory, employees, customers, test rides, service, lenders, events, demos, storage, buildings, vehicles, and day-to-day operations that all carry some level of risk. When coverage is not properly structured or when gaps are identified, those risks can become expensive very quickly. That's why today's conversation is so important. Today, we're joined by Zachary Materne, and I really struggle to pronounce his name. It is Nick, I believe. Did I get that right?
Yes, sir.
All right, didn't want to screw that up. So Nick with a hard K, not a soft K. I did some training on that. Campbell, commercial property and casualty risk consultants with Apiar. Did I get that one right too?
You did.
2 for 2.
Commercial risk management. All right. You can show how much prep work I did for all this. Zach, another hard K, and Nick work directly in commercial insurance space, helping businesses better understand their risk, evaluate coverage needs, and approach the insurance marketplace with a more informed and proactive strategy. Today, they'll help us take a practical, dealer-focused look at the current state of the powersports dealer insurance market, what's changing, where dealers should be paying attention, and how stores can better prepare for renewal. The goal today is practical, help dealers better understand the current insurance landscape, identify common areas where gaps can show up, improve how they present their business to carriers, and create better outcomes at renewal. Please drop any questions or comments you have in the Q&A. We'll work to get them worked in as we go through the presentation. If we don't get to those in the middle of this, then we'll have a Q&A period at the end. This webinar is being recorded, and the recording and presentation will be made available afterward on the NPDA's YouTube channel. With that, I'll turn it over to Zach and Nick.
Thanks, Mark. Let me get my screen up here, ready to go. All right. Are we sharing, guys? Mark, am I good?
You got it
Looks good
good?
to me.
All right, cool. Let me get all my stuff lined up here. All right. Well, thank all of you. Thank you all for being here today. I know this is probably one of the most exciting topics that you've had on your calendar for months to talk about our insurance update. We've done this a couple of years now. I will say we're a very proud partner of the NPDA. We're going on our third year being a member or being a partner of the organization. We've been able to offer much consulting and feedback and any sort of conversations around insurance to members, other partners. It's been really the board. It's been really a great experience over the last couple of years, and we're excited to be here today. So I'll go ahead and get started. All right. Who are we? I'm Zach Materne. For 17 years before I got into the insurance world, I was a power sports dealer. If you haven't heard this spiel already, I was the BMW, Triumph, Ducati, and Vespa dealer in New Orleans, Louisiana, with my family. And we sold the dealership in 2019. At that point, I transitioned my career into commercial insurance, really with the idea of trying to get the questions answered that I could never get answered when I was on your side of the desk. And over the last 6 years, I have been able to put together a pretty awesome team here at Apiar Cell Brokerage, and now we really focus in this space. And so I joined Apiar almost exactly 3 years ago with the idea of building this vertical within the company and building a team. Last year, Nick Campbell, I'm still in New Orleans. Nick's in our Phoenix office. we brought him on as another producer in this space to mentor and to grow this with us. And so, Nick, with that, I'm gonna go ahead and turn it over to you just for a sec to introduce yourself.
Yeah, absolutely. So I've been doing commercial insurance for about 11 years now. Been kind of a generalist for a long time with a slight focus in, construction accounts. And then, as Zach said, about a year ago, 18 months ago, he said, "You know what? You don't have to work on lame construction accounts anymore. I've got something way cooler, Powersports." And he wasn't lying. It's not to sound like an insurance nerd, but it's kind of exciting. There's a lot of stuff that goes into insuring a dealership, as you all know. But it's been great.
And
We
since he's
embrace
the insurance nerd, he can take that role. So I'm not the insurance nerd.
we embrace nerds around here. As Bill Gates once said, be nice to a nerd because one day you'll work for one.
That's right. That's right.
And look at me, I'm working for Nick now. All right, so I really want to start with this theme of today. The goal really isn't to buy insurance. It's to this is probably one of the top five expenses on your P&L for the year. It's necessary. It protects you, and honestly, from your perspective as the client, you determine on what kind of risk tolerance you want to take. But I think that what I've been pontificating now in this time is that you know you can't look at this as a commodity purchase. It really needs to be a risk management strategy, and part of that is due to the fact that there are very few markets that write this business. And so it's really important that you're thinking about it before 2 weeks before your renewal, and thinking about it throughout the year, because it is a tool, but it's also a very arduous process to do. And so just as a theme here, we really want to talk about, it's not just numbers. It's actually a way for you also to kind of look and audit your own processes within your store. Having been on the dealer side, there's such good operators have got such great processes. The risk management process really works into a lot of those processes and needs to be thought throughout the dealership. All right. So what are we seeing? The whole idea of this, if this is the third one I've done in 3 years, webinar, what are we seeing in the market right now? What I can say, thank God it's not me saying, okay, there's 5 more markets that have pulled out. Last year, we had the departure of E. Hall and the final departure of Century with the few Harley Davidson dealerships that they were signing on, that they were still signed on with. This year, there's actually been a little bit of a stabilization, and what we're beginning to see is new markets emerging. And one point I want to make here is that just because you are a commercial insurance broker does not mean that you have access to markets that can write dealerships. There are specific appointments in this space that allow us to be able to write with garage underwriters. So as we've built this practice, it's not only about finding new clients, managing our current clients. There's also a lot of work on our part to continually have conversations with markets and have our finger on the pulse of what's happening in the industry, so that we are aware that maybe once we get you on for the first year, that we know what's available the next year if we do have to move for any reason, or if there is something that's more competitive that's come out there. While we're talking about markets, I think probably one of the biggest changes that's happened in this calendar year is the fact that Zurich, which historically has been for about the last decade, has been only available through direct access, so you have to go direct to Zurich, has now opened up their appointments to brokerages. And there are now 3 brokerages in the US that have access to Zurich, and we are one of them. Additionally, they've actually opened up their appetite in more states as well. So this is and Zurich is kind of the gold standard in this space. And so it's really great to be able to have that in our tool chest, but also be able to just have it in the tool chest of dealers. What I will tell you is that there is kind of a tiered system of difficulty in placement. If you are a motorcycle only dealer, Harley Davidson, maybe European, that's probably the least amount of heartburn that we have trying to place. Once you start getting into more of what they would consider a power sports or off-road exposure, if that exposure is above 30% of total sales, then that's going to knock out some available markets, Zurich being one of them. And then once you get into watercraft, that really starts to create issues. So just, there's still those challenges there, but we are seeing stabilization of the market, and we're starting to. I'm not going to announce them yet, but there are some other markets that will be coming out probably in early 27. Additionally, what we're also seeing is that the markets that have been around for a while are starting to kind of put their guard down a little bit. Over the last 6 years, we had lost so many markets. The markets that were left really started to get a little nervous and tighten screws, and we'll talk a little bit about how you can work on telling your story on the operational side and making sure that's correct. And those pieces are still there when we put a submission in. However, there are markets, specifically like Risk Point, that was very hesitant to stay in the power sports space, motorcycle power sports space, but has actually doubled down in it. And we're really seeing some great results for them just in this calendar year so far. Property and cat exposure is always an issue. If you live in the Gulf Coast, like I do in New Orleans, Florida, or any place that has wind and hail issues, those are always a little bit more of a challenge on the property side. The West Coast with all the fires that happened in the last couple of years, there are challenges in certain parts of the country, but that's still there. So that's really you probably are aware if you live in one of these places how difficult that is to place. The umbrella
Nick,
excess, yeah, Nick.
I was just gonna say, and that's where it kind of gives us a chance to shine. So, for example, as you said, Zurich is the gold standard. No ifs, ands, or buts about it. But say for example, you've got an operation in Texas, and their property rates are just outlandish. We might have to get creative, and you might have one piece with them and another piece elsewhere to make the most sense for your business.
Yeah, I mean, and that's really where if the strategy here is number one, if you're marketing yourself with only direct markets like Federated or Zurich Direct versus a broker, they're only going to have access to their programs. With us, if we have, let's just say like North Texas or I am in the Gulf Coast area, we may be able to put the garage piece in a more standard market, but may have to find a surplus line market or a catastrophic market for the property piece. And that's kind of where that broker relationship is really important, because there's more and more of us having to create more bespoke programs than just saying, oh, here it is. It's all under one underwriter. That's really not a reality anymore, specifically when you start getting into coverages like employment practice liability and cyber, because when those are packaged into the program, they typically don't have the amount of teeth and support that you would need if one of those issues actually happens. Umbrella and excess market is really something that is probably one of the biggest red flags right now. Starstone, which was the go-to for a long time, has gotten rid of their appetite for dealerships that are not just selling motorcycles. And I'm actually going through a renewal right now where there is no other option right now for umbrella. Luckily, we have another option for an underwriter that's got an umbrella, but the excess market is very tight. And if you're trying to build a very big tower of umbrella or excess coverage, it's first of all very difficult, and if you can find it, it's very expensive.
What kind of umbrella coverage levels are you seeing right now? I mean, I know there's a broad range of dealer sizes, but if you kind of look at the data, your average dealer across the country right now is doing 18, $19 million in sales. What kind of umbrella coverage should that dealer have?
This is such a gray area answer that we have as brokers on this space, because it comes down to two things. What will the market bear, and what can the client afford? What I would tell you is that there's a sweet spot in between saying, okay, so my garage liability limit is $1 million with risk point. Risk point will offer me $2 million cap for $3 million worth of coverage. If you're a 5, 6, 7, $10 million store, what are your assets? What are you protecting? Who's the dealer principal? Who are the investors? Having that conversation on what that looks like. The biggest problem is that you think, okay, let me go as much umbrella policy as I possibly can have because I want to make sure I'm covered. The inverse of that is if there is a tremendous catastrophic casualty claim and a plaintiff's attorney gets involved, that could also look like an open checkbook as well, too. So it's about finding that. It's about really having that's a really an individual conversation with the client to figure out what that looks like. But the majority of my clients are sitting between, in that typical maybe $7 to $12 million revenue, or sitting about $2 to $3 million in umbrella coverage. Nick, did you have any? I saw you shaking your head. Do you have any input on that?
Oh no, I was agreeing. Yeah, I would say only because, as you said, the first $2 million layer is the easiest to get, and then after that, I mean, a client might need it, but it is not priced to sell, as they say.
Yeah. And what drives that? It's the completed operations, because in your garage liability, coverage, you got completed operations, right? So that's all the work your mechanics are doing. And that's, where could these losses, where the losses could happen if they become catastrophic, are very technical. New markets are starting to emerge. This seems to be a leveling out. I mentioned Zurich now being brokered, which is a great asset, and being in some more states. But I think the overall theme here is that strong operators are creating more options. And I think that's probably holistic for every piece of the powersport business, right? Strong operators are probably making more money than non-strong operators. And so as you're looking at every single piece of your business, risk management should be in that process that you're putting together. But I wouldn't say that, the market's not universally hard or soft in this space. It's just becoming more selective, which is requiring that the work that you do and your broker does to tell that story when you go to market, and having enough time to tell that story, is really important. Mark, why don't you throw up that first poll question while I go to the next slide?
There you go. Going to put that out there for about 60 seconds, and then I'll stop it and share the results with everyone. If you can just select which one represents your recent renewal. And I think this is kind of a gray zone question, in that, it's kind of all in. Just how did you feel about that? Not just price or time it took to do it. How long when dealers are doing renewals, Zach, how long does it typically take from when somebody says, hey, I want to renew, and they actually sign the document, get you the paper? What does it typically take to get that first set of numbers back?
That's a great question. And I'll tell you that the number one complaint I hear from people is, I always hate because the renewals are coming in 3 days before, the midnight before, right? And so preparation on the front end is so important. There's so many variables here. What I like to tell clients is that we really don't want to start the conversation within 90 days if we can avoid it. I mean, listen, I'm not going to, if every situation is unique, but if you're looking at your calendar right now and going, okay, I renew in February, 90 days is kind of the sweet spot. I would say if we can at least have a conversation 120 days. There are a couple of variables here. One of them is, first of all, timing with when you start talking to people. Number two would be your ability to collect information and get it to your broker, so that they can then tabulate everything into the multitude of applications and pieces that then we can review with the client and then get it out to market. We really want to be into market no later than, if we can avoid it, no later than 60 days. Really, that kind of 45 to 60-day window, so that we can at least get quotes back no later than, the goal is to have no later than 2 weeks before renewal. No matter how far in advance we get them to the underwriters, no matter what need by date we give them, it always is like a 5-day window on either side. So the more that we can prepare on the front end is gonna provide us better results on the back end. The other part of this, I didn't mention this in the first slide, but I always like to mention this too. if we're talking strategy, not commodity buy, the way that this business works is that if you engage me and I tell you I have access to these markets, and you engage someone else and they have access to the same markets, what you don't want to do is throw both of those guys into the market, because what happens is that once we're both in the market, we then block each other. Two brokers can't access the same market. And so while you think, hey, this is how I'm going to get a better price, my professional advice after doing this for as long as I have is pick your guy, have a plan, go with the guy, have them go out and fight in the market for you. Unless there's some sort of unique situation where the other broker's got access to a market that the one you're working with maybe doesn't. I mean, those are fine, but what you don't want to do is throw so many people into the market. First of all, it's a tremendous amount of work because you're having to send data to however many people that is. But what ends up happening at the end is that if there are, let's just say, 3 brokers in the market, they give you 3 different options. Maybe one piece of all 3 of those would be the best possible program. And then you're stuck having to go, well, I'll go with plan B then, and not have all 3 of the best options, if that makes sense. Because
Right.
there could be coverage in one area, maybe garage liability is best here, and inventory is best here, and workers' comp is best here. If there was a strategy going in with the broker to say, this is where I'm going to go, then he can go and fight in the market and say, this is everywhere I went, this is the best options. And this is maybe tier 2 if you wanted to have 2 options.
Yeah, I had that in my tips for everybody. So lesson I learned the hard way. But
and
all right.
we tell this to people all the time. I have, I have multiple conversations a week where I go, hey, I probably can't engage this year. I have no problem consulting. Let's talk about it next year. Or, hey, I may have access to this market they don't have access to. Let's have that conversation. I'm looking at this poll right here, though, and I think the breakdown is about where I sit as a broker as well, about where I selected, more challenging and significantly more challenging. Although I probably maybe put one answer as better than expected. I've had a couple of those this year, which we got to take the wins where we can get them, right?
Got it.
All right.
All right, let's go into this. So what insurance reflects your operations? What are we seeing in the market right now? They really want to know operational controls. What is your process for test rides? What are your they want to see your demo waivers. They want to see if you have a loaner program. What are your loaner waivers? What is your process for safety meetings? How are how often are those happening? Being able, so much of this is storytelling on our part, because these underwriters are getting hundreds of submissions a day. And what's going to make sure that yours sticks out so that they go, yeah, it looks good. And you have a good operation, so we're going to insure you for that good operation. That's really a big piece of this. I have reviewed 2 groups this year where they were in really bad shape with losses. We were able to do a loss analysis over the time, and what was happening was that there were these recurring every year. There was a test ride crash. For one of them was a test ride crash every year, and there was a completed operations, like someone not tightening the oil plug after an oil change and somebody crashing. So that's really where the broker comes in and goes, hey, let's talk about your process. How can we help you create a better process? How can we, so that we can, as these fall off, we can go to the underwriter and say, hey, these are no longer happening, and this is why they're no longer happening. That's a huge piece of this. Increase focus on controls. It's all kind of that same theme. And when there are losses, they want a narrative on the loss. They want to know why it happened and what you did to fix it. Even if, because most underwriters are looking back about 3 to 5 years, but really document the same themes you'd have across any other part of the dealership. I love this question here. If an underwriter spent a day in the dealership, what would they see? I think that's a great way to look at it. And that's probably a great way to, it would be the same way that you would go, if I was a customer reaching out to my store, what's the experience they have when they walk in the door? Let's just put those same best practices in this industry into what you're doing on the insurance side. Because I think you'll probably find some crossover there, but it's also an opportunity to go, man, we should probably lock up the gas, or those keys are sitting on a desk. Or, hey, Why
We
is
should
there a
probably
driver's
lock,
license sitting on the
we should
F&I
probably
desk?
lock the front door
You should probably lock the front door.
before the employees get there.
Right. How many times did you get a call in the middle of the night that someone hadn't
Uh,
the front
I
door
went
not
I
locked?
went for 12 years not getting a good night's sleep.
You know, going back to what you said before, Zach, about getting these submissions over to the underwriters, and we try to make it as palatable as possible. And that's part of what all the documentation that we need to request up front, these 15-page applications, loss runs, financials, a big thing I'm seeing recently is consignment agreements. We need to send a copy of the consignment agreement. They want to review it. They want specific verbiage in there. So, it's our job to get all of these documents. I know it's not fun, but we get all of this documentation up front. We provide it to them, and we literally bullet point it for them. And they look at the submission, and they're like, okay, yeah, this is literally everything that we need. And that's what we're trying to do
Well,
to get the
and
best quotes for everybody.
great point, Nick. And as to Mark's point with timing here, the more of that information that we have up front allows everything to move faster, because what happens is we send the submission in, they accept it, and then they immediately send us a list of 25 questions of stuff that's not in there.
Yeah.
And then once they send that email, you're then at the bottom of the pile again, right? So hopefully maybe and like this happens every time. And most of the time we know the answers and we can get the email back quickly. But if we have to go back to you to ask, these questions, which is going to happen anyway, but if we can reduce that need for back and forth, that will allow quicker turnaround, but also it could mean the difference between getting a quote and not getting a quote.
Yeah.
Before I go to the next slide, let's throw up the next poll, Mark.
There you go. How confident are you that your current insurance program accurately reflects your dealership's operations today? Was there some issue or incident that drove you to want to ask this question there, Zach?
Oh, there's all kinds of questions. This is, we're only as good as the information we're provided. And then on the other side of that, we're only as good as what the verbiage in the policy is. Yes, I have seen this. I've seen this because this is typically where you get to a claim and you go, oh man, you didn't tell me that your lease was triple net and you were required to cover a building limit on your policy. That would have been really nice to have in the beginning when we reviewed the exposures. It's that type of stuff. It's every single thing every single contract or piece that you've signed to say, hey, I'm liable for this, not letting us know what's going on. I would say that the breakdown here of numbers is probably where I would where I would live. Majority are somewhat confident. All right, let's go to the next slide here.
I'm going to share that real quick with everybody.
Oh, I'm sorry, I wasn't shared.
Now it is.
Okay, I know we're at the half-hour mark right now, so
That's right. Everyone runs long. Used to it.
okay.
All right, let's keep going.
All right, so aligning operations with coverage. What are we seeing? Events. I sat on an MIC call earlier this year. They're talking about we got to get more people in the store, more butts and seats, all these incredible things, parking lot flamethrowers and group rides. None of that is covered by your garage policy, at least not 100%. And most of these underwriters, specifically as the market started to shrink over the last couple of years, maybe it wasn't defined before in the policy, but it's definitely excluded now. So if you're having events, you need to have a conversation with your broker to talk to the underwriter to say, hey, is this covered under my policy, or do I need to get outside coverage for this? And
you're saying no flamethrowers?
Here's the deal. Here's the deal. You can have a flamethrower. You can have a flamethrower. But if you burn somebody, it's not covered in your policy. And if you're cool with that, then that's up to you. That's your risk management profile. I think look, having been a dealer, I can tell you that we did lots of things that now I go, whew, good thing I didn't know what I didn't know at that point, right? Harley Davidson stores are probably the biggest complication in this, because they usually have events on every Saturday, right? And so alcohol, yeah, alcohol is definitely not covered in your policy. But if you have a vendor that's a third party that's got insurance that you can be put on as the additional insured, you're at least better covered there. But if you're doing a big parking lot event every Saturday in your store that's not selling or servicing motorcycles, that is something you're going to want to have a conversation with your broker about to see if that is in your policy, and if it's not, purchasing an event policy. The majority of event policies are a couple $100 for the event, depending on the size and piece. We've actually in our brokerage put together a whole event team now where it just goes directly to them because we just have so many requests for this. But what I will tell you is that group rides are not covered by your insurance, and are not cheap to insure. The AMA has a program that dealers can sign up as a promoter member, and they do offer coverage through their captive. That's a couple $100 for group rides. But any sort of group ride that's led by you, even if they're waivers signed, that is not being covered under your garage policy. You should be seeking coverage from outside. The other part of this too is if that's something that you are doing and maybe you want to go, hey, I don't want to take on that expense, go to the law, go to the hog chapter. What does their insurance say? Try and push those things out and maybe just be the stop on the ride.
Be affiliated.
Be affiliated, not the host.
Is there some benefit to, potentially for those kind of high risk activities, utilizing a different insurance company, not saying a different broker, but a different company so that there's some separation of exposure? Or
Well, it would definitely be a separate underwriter. Like if you're coming to us, if you're our client and signing an event policy, we're going to a market outside of where you're currently placed. I think the biggest issue right now is that the markets for on-road group riding, that's going to be, I mean, that's a huge risk for a $1 million one-day policy. So that may cost $2,000, right? And so it's already being placed outside, and there are places to go for it. You just need to make sure that you understand what the risk is, what risk you might take, and what the potential cost is. That's why I think for the group ride piece, the AMA's program might be a great opportunity for dealers to explore.
cool. Is that the first time somebody's popped up a flamethrower in one of your presentations?
First time, yeah.
That's a first for me as well. Yeah.
I mean, you didn't turn it on,
with
so I mean, I don't even know if it could just be a Nerf gun.
That was actually, I did some work for a friend of mine, and I wouldn't accept payment, so he sent me that. I thought it was pretty cool. Hangs up on the
That
wall
is
over there.
cool.
I'm easily bought over by cool things.
Before we move to the next slide, so again, I tell this to all my clients, not just Powersports. Hire the bartender with liquor liability. Don't carry that exposure. That's if you take one thing away.
Yeah, make sure they have insurance and they're licensed and you're on there as the additional insured. But if somebody gets on that bike after drinking 7 Red Bull vodkas at a MotoGP race party and runs over a family at the crosswalk, that's going to be a problem. Test ride process audit. Having a good test drive program. Some underwriters are requiring that test drives are led, but they definitely want to see a signed waiver that releases liability, a signed waiver that transfers property damage to the individual. And I will say this works. It worked when I was a dealer. It's worked for my clients. So if they crash on a test ride, they're responsible for it. Correct gear, some sort of auditing process of not putting the guy that just came out of the MSF course on, the S1000RR. Figuring out what that, I mean, most operators are doing this, but just reiterating that and making sure there is a process and it's being followed the same way every time. Inventory reporting, some markets do monthly reporting with your inventory. Some just give you a blanket limit. I wrote an article about this for Powersports Business. The mindset is always, okay, what is the floor plan's requirement for me for my insurance? It's 2 million, great. Well, then did you realize that you actually have 3.5 million in your store, and then also all of your company vehicles are included in that for physical damage? So it's really about making sure you're looking at what your inventory levels are on floored and non-floored inventory, so that your used bikes are covered and the vehicles that you own are covered as well. I always say this, it's up to you on your risk tolerance. But if everything were to burn down in the building, would you be covered? That's where we should start. We can always adjust from there.
Talking about burning. Come on.
If you see Mark outside your store, you might want to check your inventory levels before you
I
let
had
him
no idea that was going to be a great webinar prop.
in. And then, I've said it over and over again, risk controls, having good processes, having good documented processes that we can sell to the underwriter. I love this line. Coverage issues aren't caused by bad insurance. They're caused by operational changes while insurance programs stay the same. Understanding, telling the right story every year of what's going on to your broker so that the broker can tell that story so that we can we know where the holes are as we're going through this to make sure that we can present to you how to plug those holes. But I think a big part here is what part of your operation has changed the most since your last major insurance renewal. I think probably a great example of this over the last decade or so has been the introduction of battery operated bikes and products, right? That the battery exposure changed a lot with exploding batteries in stores. These are the kind of things you should be thinking about every year. What's changed?
I'll tell you that, having facilitated 20 groups for a decade and been in the industry for 35 years, I know quite a few dealers that have suffered catastrophic losses of their business. I would have to say that 75% of those were related to a battery fire for battery charger, typically in the service department, leaving them on overnight, batteries on the showroom floor, bikes got gas in the tank. And it seems like that's a very common item that causes big losses for dealers.
Yeah. All right, Mark, let's throw the next question up there.
Bing. Has your dealership had a claim in the last 24 months? Do you want to put any caveats on that? Is it just something that you had to talk to the insurance company about? And
I'm just kind of curious on how many dealers are having claims. Because it's, for a while I was like, man, I'm really lucky. I've doing this for a couple of years now, minimal claims.
You are jinxing the crap out of some dealers.
No, I've already jinxed myself. I'm getting like a call a week right now, right?
Your inbox is going to blow up by the time we get done with this thing.
I'm already jinxed. That's why I brought it up. I would quietly tell myself that for a while.
I've been fortunate as well, knock on wood. I think the last couple I've seen are just, like work comp claims. Something happened in the service department. Nothing serious, but just small work comp claims, luckily.
There's your results.
Yeah. Man, these trends are exactly how it's validating what Nick and I see every day.
Yeah.
The dealer that had multiple claims, if you don't mind maybe dropping in Q&A, just kind of a very high level, what happened there? Be interesting
and your phone number. No.
Yeah.
When's your renewal date?
So that you can block them, Zach? I'm sure that's probably the reason. Not so you can call them because you don't want that person on your book of business.
No, we can help. We can help.
I don't want to go sending your kids to college. All right, let's keep rolling.
Keep rolling here. So this is a big part of this too. What is your premium actually paying for? Is it just expensive PDFs that make you really mad at least twice a year when you renew them? Or are you paying for a service? Nick and I do a lot of free work because we don't get paid until we bind coverage. However, that free work is really important because it's making sure that you understand all the pieces of this that you should be thinking of. I think dealers should be expecting more from their brokers. Look, you're paying between probably $50 and $1 million in insurance right now. If I'm looking at where my clients live, get something for that from your broker. From a consulting perspective, if you know you're going to be moving, if you know you're looking at adding new pieces, if you're looking, anything that would change the way the business works, don't tell them as soon as you sign the paperwork. Get that conversation started because you may be going from a size that puts you with an underwriter that brings you down to a even better option. So having those conversations around that, if there are process problems, if you are having multiple claims, engage them to say, hey, how can you help us with this? Or for instance, there are a lot of the waivers that we have that are approved by underwriters to say, hey, I like your demo waiver. This is actually what's gonna be the better option. All of these pieces here, outside of just asking for certificates, and making sure that you get employees added on there. The big thing too is claims advocacy, and us, our brokerage has got some incredible claims advocacy. So you can call our team, you can call Susan on our team, and talk through her with what's going on and create a strategy. That's not opening a claim; it's having a conversation to say, okay, these are all the a lot of the consulting that would happen before you even actually have to open the claim, rather than asking your broker for your paperwork and then calling the phone number and starting it and then having nobody manage it on the back end. All of this stuff should be included when you sign on with a broker. Claims are getting more complex, or can be more complex. I've seen some very complex claims this year, and that's having that extra piece, when things really go sideways, having that extra level of advocacy and consultation from the broker is really important. And the carrier relationships matter. I can tell you that over the time that I've gotten into this world and solidified myself in the industry and work with underwriters, I have the relationship that Nick and I have with the underwriters gets us information back much quicker. We have clean submissions. We work with these people on a regular basis. There is a little bit of nepotism in here when it comes to getting a good submission across the line. And I do believe there are situations where I've gotten things approved or I've gotten deductibles done because of the books of business that we have with these underwriters. And that's really, really important. So I like to tell you this. I like this question here. If your broker disappeared tomorrow, what would stop working? And if you say nothing, then just drop your phone number in the chat.
Again, you're getting
It's time
blocked.
to change that.
In jest. This is not, let's throw the next quiz up there.
All righty, here we go. So what service do you value most from your insurance broker? Claims advocacy, coverage advice and consultation, certificates and endorsements, renewal strategy and carrier negotiations, or risk management support?
I'm actually very interested in the results of this question. I mean, all the results, but just because I'm on the, every side of it, processing, writing, it's interesting.
I almost put nothing on here, just
I was
Zero.
gonna add another option that was brokers with easy to pronounce names.
Oh yeah, like Nick. Ugh.
I don't know. I struggle with that. I had to go to ChatGPT on that one. And I thought Zach was a unique name, and then I was at a dealer group last year. They had 5 Zachs, four Ks and 1 H.
I know. I'm just the Adam of the world now.
Yeah, wait, what is it? Right now it's Liam and what are the 2 popular names? What decade was Zach popular? Was that 1922 or 1922?
I mean, I was born in 82, so
I mean, pretty soon we're going to be in the age of all the kids have names related to Game of Thrones. So we're going to have Khaleesi. We're trying to figure out how to put that into Lightspeed under their security account. Like, how do you spell? Is that Khaleesi or E? Is there an I before E except after D?
I've already ran into a few Arias, so it's already happening.
Oh, wow.
All right, you want to end that poll?
We'll have the Sopranos area. That'll be cool.
Well, look for the 6 people that responded, I would say that's awesome.
Yeah,
that's what you should be getting that.
All right, we're not kicking you off the webinar just yet. All right, what do we got next?
All right, this is the next piece I always talk about is risk tolerance drives everything. It is our job as brokers to present to you everything we could possibly present to you of areas where you need coverage. When I go over a proposal with a client, it's like this is the first draft of where we're going to end up. So I think that if you're just looking at that end number going, oh, this went up this year, or this went down this year, hopefully it went down this year, or it's flat this year, I think it's important to go back and look at all the coverages that are in there because, a lot of dealers like that we're seeing do not have employment practice liability. That's something we're always going to present.
Wow.
A lot of dealers, we don't have cyber insurance. We're always going to present that. It's up to you if you want to bind that coverage or not. So that gets even more complicated when you do have other brokers in the market because everyone's interpretation is different too. So just think about some of this stuff is removable, and you can add, and you can change deductibles, you can change limits. That first draft of the proposal is really the first draft of where you'll end up, unless you want to go, cool, this looks great, bind it. But it's up to you as the dealer on how much risk you want to take. And so I think this question at the bottom is, what loss could your dealership absorb without changing how you operate? And what do you want to take a $10,000 deductible on your building, or do you want to take $1,000? You want a 10% deductible on the building? These are all the things that those are places where you can kind of a little bit control the cost on the backside and understand where you are covered. I would not suggest that dealers are making $1,000, $2,000, $3,000 claims in the year. There's so few markets that are writing this right now. What you don't want to do is have a bunch of little claims at the beginning of the year and then have an egregious claim at the end of the year that ends up getting you canceled. And then we're scrambling to find coverage for you for the next renewal year. But coverage options, making sure you review your coverage options, deductible options, and then finding those specialized carriers. Like I said, if you've got a federated policy with an EPL and cyber policy, pull those out of there. Get a standalone EPL policy and a standalone cyber policy. Not only is it going to be probably less expensive, it's going to actually have coverage and claim support on the other end. I think what's really important too here.
It's really like going to the F&I office, isn't it? I mean, you're just like, do you want 1 year, 2 year? What deductible do you want? Do you want gap, or you good with that?
Well, it's only 1 year, but yes,
you get the idea. You got options. It's you get to kind of move around the pieces on the menu and figure out what you want to pay, and how much risk you want to absorb.
Right. Another thing I want to mention, I get a lot of questions from 20 Club. I'll get Sam Tanzer will text me in the middle of a meeting, or some other consultant will text me in the middle of a 20 Club meeting and go, hey, can you tell me more about group captives? And group captives are when you pool a bunch of businesses together and there's a sharing of risk. Unless you are paying in the hundreds of thousands of dollars on the casualty side, not the property side, the casualty liability side, you are not going, and you have a lot of cash in the bank, you're not eligible for it. I just want to make sure that's out there now. If you live in Florida and your property rates are high, a captive's not going to help you. Moving to Ohio, where property rates are much lower, would probably be the better way to go. If that's all, I mean, that's the only way to fix that problem, because that's just that's what the reality is in Florida. But captives are for this industry are not applicable for most of the industry.
You're cutting in my Q&A time. Let's keep going.
Okay. I think I have one more slide here. You can put up the last poll.
All right. There you go. Which statement best describes your approach to insurance? Everyone's having to think.
I thought everybody left. I thought it was just 3 of us.
Mark Marquez, he really killed MotoGP. I just don't like having somebody that dominant. I don't think it's good for the industry.
For the sport or the industry. Well, now he's wearing red. So is he still wearing red? I haven't paid attention this year.
I think he's doing good on the Ducati. Ducati's a hard bike to learn on. Be interested to see what happens with MotoGP when they go to 800 cc's next year. I think it's next year. All right, with that, so we'll cut you off so we can keep rolling here.
Man, I think we've got some very sophisticated insurance buyers in this call, because the fact that no one picked primarily focused on minimizing cost, or they're just trying to suck up to the presenter. I don't know.
they knew I'd roast them.
I do think the best place to be is that second question: balance between cost and protection.
Yeah, because we're never trying to we never try and pad the premium. We just want to present everything that you might need, and then carve away, what makes the most sense for, your risk tolerance.
No, I mean, everything is so this entire process is so volatile. I'll tell you that working with us, what I want to do is, by the time I get to present to you what we've put together, that everything that I could have asked for credits on has been done. And so that then we're working off the number to say, okay, if we need If we need to reduce premium somewhere, then let's figure out how we do that with deductibles, or do that with limits, or we do that with, taking certain coverages out. Or if we want to increase coverages, by the time we get to the end of this, this is not buying a motorcycle and having the sales guy go back to the manager's desk and going, "Hey, this guy will buy it if you do it for 10 grand." That just doesn't exist. It's really about it's a mathematical equation. Exposures, formula, premium. And so if you change the exposures, it changes the premium. This is kind of a recap, the 5 things that I wanted to just touch on for today. The market's evolving. Insurance reflects your operations. Coverage should match reality. Service with your broker matters, and risk tolerance drives your decisions. With that, I'll go to my little advertising piece here, and Mark, get some Q&A.
All right, so I'm going to do this differently. So you two have 30 seconds to answer each question. If you take any longer than that, I will shut your mic off. It'll be like a political debate. So first one, company trucks. Should they have logos on them or no logos?
What's your risk tolerance?
30 seconds.
I think as long as if the vehicle's insured on a commercial policy, I don't see, a reason not to. It's brand recognition. As long as your guys aren't, or girls aren't driving, like idiots on the road,
All right, so leave the logos off. All right, renewals often come in at the last minute. Is that by design in the industry? Is the hope that they come in so near the end that somebody can't go shop somebody else?
It's never by design from the way that we manage it, for sure. I can definitely tell you that if I'm competing, I think there's a little bit of I can see those last minute federated guys going in the office at 5 o'clock on a Friday. Preparation will offset that on the front end, and having that conversation with your broker and holding them accountable. That's a big piece too.
Any coverage?
Oh, sorry.
Sorry, you're over the cutoff. Any coverage that dealers often miss?
EPL and cyber.
EPL, yeah.
Now, if you're with
practice liability, that is.
Yeah, if you're with a PEO, a lot of times you can get EPLI included in that. Is that okay?
Yeah, that's fine. I mean, that's workers' comp and EPL being there is great, but if it's not there, let's place it outside.
Long as you got something, huh?
Yeah, something that's got a retro date, right? Because it's not going to happen in the policy year. It's going to happen. Something that happened in the previous policy year. So making sure that retro date follows it as well.
Should dealers every year spend some time and energy lobbying for tort reform?
Do they have time for that?
Got time for this?
Yes. Although it's always hard when your customers your big customers are the big plaintiffs' attorneys. That was my New Orleans problem.
Just from hearing horror stories over the years, we generated our dealership Woods a little laminated card that we put in every shop truck, and it's very clear instructions for what the driver should do if they get into an accident. You recommend that to anybody? Because I've heard people get in a wreck. Oh, sorry, it's my fault, or we just kind of train our guys to shut their mouth and call their manager.
This all goes back to risk controls. That sounds like an absolutely perfect way to make sure that your drivers understand the responsibility when they're in the vehicle and how to handle it if the situation happens. I think that's a perfect idea, Mark.
If anybody wants that, email me. I'll send you a copy, and I'll bill Zach for my time. Pert Bearden up in Killeen said cameras in trucks. 30 seconds came from him, not me, but you still got 30 seconds.
Cameras and trucks definitely help on the back end for sure. I don't think we're necessarily going to see in a garage policy. You're not going to see any reduction in premium. That's more of a risk aversion on the other side.
I concur.
All right. Explain what a non-admitted insurer is.
Nick, do you want to take that one?
Yeah, so a non-admitted insurer is essentially, and we only use carriers that are A-rated. So just because it's non-admitted doesn't mean that it's not an excellent carrier. I mean, some of these companies have, not that anyone wants to know this, they billions of dollars, but essentially an admitted carrier pays into the state they pay the taxes and fees into the state to be an admitted carrier. Non-admitted companies don't. So they are basically the only time that you would run into an issue is if you ran into a claim and the non-admitted carrier was like, we had a ton of claims, we can't pay this. An admitted carrier, the state has to step in and pay that claim out. For a non-admitted, you don't. But if it's a wealthy company.
But the reality too is you may not be able to have an admitted carrier in the garage space that'll write in your street.
True. Yeah.
Cool. I heard from a couple of dealers this year on their renewals that at least some companies were saying, if you want us to insure you, that we can't allow you to do test drives. And I'm not just talking watercraft, I'm talking total. What do you think the future is of test drives in the industry?
I think it's on thin ice. I think it's really, I mean, we almost lost it with Risk Point. I was able to lobby to get them to fix it. It's every year, there could be a moment when it doesn't happen. Um, uh,
We
it
we
keeps me up at
do
night.
we do at Woods. We have a blanket no test drive policy on sport bikes, but what we do is we offer the customer a 30-30-30 program. So you buy the bike, you do all the paperwork, you put insurance on it, you take off for 30 minutes, and if you don't like it, bring it back with no more than 30 miles on the clock and not have wadded it up, and we'll tear the contract up and give you your money back. That a workable solution?
I think that if you got a PI attorney involved in that, I think they could probably, you know,
Poke some holes.
poke some holes in that. What I would say is just have a good process and because let's just say that underwriters start getting rid of it, they're going to start getting rid of it with new clients. And if you're able to keep it and stay clean, it is something that keeps me up at night 100% of, at what point will the screws get tightened even more. But like that's my quick answer for that.
Definitely guided tours
Yeah.
for
Bro,
sure. Test
all
drives.
all left-hand turns.
All left-hand turns, yes. Yeah, no,
So
absolutely.
So brokers like you are assembling coverage from multiple different companies. If you run into a situation where a dealer has a claim and potentially it crosses the lines, it might be in two areas, and you've got these companies that are kind of going back and forth about who's really responsible for it. Are you as a broker going to step in and try to adjudicate that?
Our brokerage, yes, we have a claims team that will help guide what coverage is where and where to go where, and if there is crossover. A lot of the times where it separates is usually on the inventory side. So the garage liability is in one policy, the inventory is in another policy. There's not going to be a whole lot of crossover. I mean, the crossover would be if there's a liability claim because maybe a company truck ran into somebody and you're doing the physical damage on the other, but there wouldn't be any need to engage both sides. Um, when you pull out property, like in cat areas, you're probably going to have a separate property policy there, but that should all be that should all be managed by the broker's claims team to take the pressure off of you.
Okay. Consignments and brokerage. So I tend to see dealers do utilize consignments for one of two reasons. One, they don't have the money to buy the bike, or two, they don't want to tell the customer that here's what we're willing to give you for this. You paid way too much for it. So what's the risk that dealers take on when they are working consignment or brokerage deals?
What I will tell you is if you're 100% consignment, it's very hard to place you because there's not, it's not the same as even if you're going through the process of a consignment to say, okay, hey, we're going to consign your bike, you're going to spend X amount of money to get it ready. Uh, it's one more layer of risk because the idea of the underwriter is, okay, this is someone's bike that they don't own and they don't know how it's been maintained. And so what's the risk when they sell it? Is the title clear? All the things that a dealership would typically do. So if you've got a small consignment operation, probably not a big deal. Just have a great agreement, have a great process. If you're 100% consignment, it's going to be difficult to place that. So you want to make sure that your processes are definitely locked in.
One thing
Should
I'm seeing across the board is for the consignment agreements is a lot of carriers are not, they want explicit verbiage in there stating not only do you have the right to sell this vehicle for the owner, but you have the right to allow people to test ride that vehicle. That's a big thing I'm seeing.
should dealers include an arbitration agreement in their bill of sale / repair order?
I think it's actually required by a lot of underwriters now. And it's usually in the boilerplate language of all the DMSs, right?
I would not say that. No,
But,
I don't think if it's in there, I think it's maybe in finance contracts, but typically not in a dealer's bill of sale. So
but
bill of
yes,
sales are
that's always a question on underwriting. Yes.
okay. And last Q&A item is just to kind of explain to dealers. I mean, I think when I came in this industry for 20 years, I worked with Zurich, Federated Century. They kind of had their unit coverage plans. And, we've recently seen, the growth of more companies like yours that are brokering these out. What is there? Is there a reason why a dealer should go with one versus the other?
Well, I think that right now, all you've really got left in direct is Federated. And now, now there are Zurich brokers that can sell Zurich. Zurich's still selling direct. What I'll tell you is that there are some states like Delaware where you have to be admitted to sell. Federated may be your only option. So I think it's really about understanding where you are, having a conversation with a broker on where they can go, talking to the direct markets that are available as well, and then figuring out what the process is moving forward. Just know that if you end up with a Zurich or a Federated direct, every year when you renew, they're not shopping you the market. They're just putting your numbers into their computer system and turning it around for you. So there could be more creative ways. Specifically, we're talking about cat exposure and maybe Florida for property. You know, they won't be able to pull the property out and put it somewhere else where a broker could do that for you. So there's not necessarily a universal pros and cons, but it's just kind of depending on your size too. If you're really small and you're a state that maybe Federated is the only place, that may be the only place you could go. But I can tell you, Nick and I are more than happy if you have these questions to talk with us about that, because we have written in quite a few states, and I've talked to pretty much dealers in every state at this point, so we can at least align on where you should go if we can't help you.
I concur.
Well, if Zach and Nick haven't blocked your phone number, then give them a call. So thanks to everyone who attended today's webinar done in conjunction with another one of our partners at the NPDA. Excited to announce that we'll be hosting weekly seminars with our partners through the rest of the spring and summer. I think I've got 7 more of these webinars scheduled, and then I will be done for the year with all these partner webinars. But I think it's been a great experience for me. I've actually learned a lot more about some of the partners who stepped up and supported the NPDA, and very appreciative of that. And I think I'm a little bit smarter about the industry at this point in time. As a reminder, the NPDA is not just here to support our member dealers, but also the entire industry. If you're a current member, thanks for supporting. And if not, take a look at the screen. As I like to say, for the cost of about 20 cases of beer a year, you too could be a member and support a great organization. If you're not aware of what we are currently doing right now, not our only initiative, but our primary initiative is getting all of the manufacturers to move freight and setup cost into the MSRP of the vehicles for 2027. We know that there's some serious risks that are going on right now with the FTC. This is a win-win-win scenario where dealers, customers, and the manufacturers will win, but they've got their claws dug in. They don't want to go down this road, but we're going to work hard and continue pushing on that. So every time you talk to one of your manufacturer reps or one of your vendor reps, ask them where they stand on this and what they're doing to help protect dealers going into 2027. With that, thanks to everyone who took the time to attend today's webinar and to watch me run around with my flamethrower. It was fun. I enjoyed it. And if you have any further questions or you want that sheet that we put in our trucks, don't hesitate to reach out to me. I'll be happy to send you a copy of that. We will post a copy of this webinar on the NPDA YouTube channel within the next couple of days. So if you need to share this with anybody else or would like anybody else in your team to watch that, then just hit the NPDA YouTube channel and you can find this video there. With that, I'm going to call an end to it. Thanks to Zach and Nick for participating in today's webinar. We appreciate your support of the NPDA, and we hope everybody has a great June. Thanks for attending. Bye-bye.
Thanks, Mark.
Thanks, everybody.
Thanks, everybody.